Caroline already stuck in traffic, no? Caroline is stuck in traffic. So her break. Then, but she knows what she needs to do.
Okay. So how is she gonna give it to me? Email. So it means let me see if I can connect to the network.
Why? LBC. Then the LBC will come give
To
you
learn.
the password.
Okay.
The other thing in terms of Samantha and Johnston sending to the comfort monitor, has that been sorted out? Hey, Tato, guys, the questions that needs to be sent by the two colleagues to the comfort monitor. From a laptop.
So how do you know how to send it to the comfort
Monitor the questions.
No.
Test.
He's here. He's across the street. Ah, not across the street.
What is this? They are writing like a doctor. L-O-C-H. L-O-C-H. L-O-C-H-N. Okay, ma'am.
So green is forward, it is forward, and then the red is back.
I wanted to see if everything. This one I can talk to.
Or you want to see the ones that you want to hide?
No, I've already hidden.
Oh, okay. So you happy with the click?
Go. Sorry, wait, just wait. Yeah, I'm trying to see. What does it look like for you guys when I'm looking at the screen?
It doesn't affect us.
Okay, you're only looking at the screen. Okay, great stuff. So I don't have to worry that my neck.
Good morning, ladies and gentlemen.
I'm the health and safety officer. Please always wear the mask, use sanitize, and keep a social distance. Ladies' restroom is on my right-hand side, and gents' room is on my left-hand side. Should there be a fire alarm, please don't panic. Work slowly. My team will assist you. We have 3 assembly points on the right-hand side of the parking. Again, please always wear the mask, keep the social distance, and use hand sanitizer. Thank you.
Thank you, Dong. Thank you very much, Dong. Today, the weather started to be a bit wet and cold, an introduction to the winter, I believe. But this shows how important this document or this publication that we'll be discussing and engaging on is, and the matters that are related to statistics, because that gives us that edge and we understand what is happening in the tax ecosystem, and you cannot just do that without having data and the science behind it being available. But without going into much around that, I'd like to introduce our first speaker, who will tell us the purpose and take us through what's, how we're going to, and give us an introduction into this workshop. Please join us, Johnston Makubu. He's the Chief Revenue Officer at South African Revenue Service. Thank you.
Program Director, thank you very much for that word of introduction. The leadership colleagues of SARS that could be joining us online and in this venue, the colleagues from National Treasury that are also joining us online, our esteemed guests, ladies and gentlemen, I bring you warm greetings from the SARS Commissioner, who unfortunately couldn't join us for this session because of other commitments. It gives me great pleasure to welcome you into this session of the Tax Statistics User Group Workshop. It's quite a fundamental and important event in our calendar where we get to engage, discuss, solicit views, and as I shall explain later, in relation to the tax statistics that we do publish from time to time. The last version or edition, the 13th edition, which we published on the 31st of December 2020. I think it's important to take note, just as an opening remark to this workshop, that over the years we have seen some modernization of the tax administration within our organization, SARS. And with this modernization, we have seen a continued improvement in terms of the tax administration data that we are able to produce and we are able to generate within our various processes. And it is these improvements that we have seen year on year, starting from the 2008 period, where we really started on the journey of publishing the first tax statistics bulletin to the 13th edition that we are going to be workshopping today. We have seen the improvement in modernization coming through in the form of improved tax administration data, which therefore also then trickles into the tax statistics that we then produce, and that underpins the 13th edition that we will be talking to today. Perhaps becomes very important that I address the purpose of why we gather today and why we we have set up this workshop. First and foremost, I think it's important to adopt a spirit of continuous improvement, to allow ourselves to reach out to the stakeholder community, to solicit inputs, to get comments, get feedback, and take suggestions on areas of improvement in terms of the publication that we give. We understand that there's various stakeholders that consume our work, and we would like to make sure that we do create a feedback loop that allows us to be able to hear various stakeholders giving us feedback so that we can be on a journey of continuous improvement as we continue to produce tax statistics going forward in this country. Now, if you look at our organization, and I think it's important that we continue from time to time to remind ourselves that we are on a strategic journey as SARS. And if you've been following our utterances in the public domain, you would know that we are pursuing Vision 2024, and we have articulated our strategic objectives. I will not go through all of those strategic objectives, but suffice to say, there is a strategic objective number 5, and that strategic objective speaks to the expansion of the use of data for insights, risks, and improved outcomes across the tax and customs ecosystem. And therefore, as an organization, we have taken very seriously the fact that we are in the 4th industrial revolution, and data and big data is becoming an enabler for an efficient tax administration. And as such, we have hardwired into our strategic objectives that we pursue in Vision 2024 the need to appreciate that data does give us the ability to be able to improve the entire ecosystem. And accordingly, this publication that we will be workshopping today becomes quite fundamental in remaining true to that particular strategic objective in terms of expanding the use of data for the purposes of improving the ecosystem. Now, we anchor then the conversations we're going to have today on strategic objective number 5 as a key driver of what we want to be getting into. Simeon Stransky says that statistics are a heart of a democracy. And this becomes quite important if you want to understand that tax statistics in general and tax statistics in particular give us a sense of where we are in pursuit of our higher purpose of enabling the state. And I'll talk about the higher purpose a little later. And Peter Drucker, who is a foremost commentator and author in management studies, talks about that which you are able to measure, you are able to manage. And in that line, we are of the view that we need to be able to use data to be able to successfully measure certain aspects of our business so that we are able to manage that and improve it because we've got sight of those key matrices. And the statistics, tax statistics, and the bulletin that we'll be discussing today begins to show some of these matrices that we are measuring and how we are able to improve going forward. So important is tax statistics in the country that you would be familiar that the state has decided to put together a department that is very prominent in the fiscal framework and the fiscal environment of our country, Statistics South Africa, and the work that they do becomes quite important at a country level, but as well from a SARS perspective, the tax statistics becomes, again, a very important area of our work. Central to the tax statistics that we provide, we want to make sure that we continue to use technology to expand and make sure that there is usability of these statistics and they are improved on an ongoing basis. Now, we will all know that an effective use of tax administration data allows the Revenue Authority, amongst other things, to ensure increased taxpayer compliance levels. It ensures that we enhance revenue collections. It ensures that it gives us the visibility from which we can build and assist in the identification of new revenue opportunities, explore the untapped tax base, and finally also allow us to increase the ease of doing business with SARS. So from the tax administration data and its effective use, these are some of the benefits that we are able to get. You may be asking, but why do we want to continue to publish tax statistics in the bulletin like we have done for 2020? The first reason is that we do believe that various stakeholders find the information that we make available critical and important. Amongst these stakeholders, we include government, we include ourselves as an entity, central bank, legislators, academics, as well as socioeconomic and political bodies that are saddled with private and public research, sector research. So it becomes very important for us to continue to publish this bulletin to ensure that various stakeholders are able to find rich data that they can be able to use for different purposes. The second reason of why we want to continue to publish these tax statistics is that it enhances the principles of equity, efficiency, simplicity, transparency, and certainty, which is quite important for us as a tax administration to create the environment that is equitable, an environment that is efficient, that is simple to interface with, that is transparent, and that creates an overall sense of certainty for all that are involved in the ecosystems, whether it be the tax ecosystem or the customs ecosystem. The third reason why we publish this tax bulletin is that there is more varied and more deeper tax administration data that we are able to share, more than what we are able to share in the SARS annual report, as well as the National Treasury's budget reviews. So this tax statistics becomes a deep dive into some of the work that we do. The fourth reason, perhaps, is to make sure that we make available information into the environment for the purposes of making sure that we amplify fiscal transparency, we enrich policy debates, that we are able to facilitate evidence-based insights by parties that interface with us, also enrich and empower research by various professionals that are saddled with the creation of knowledge and enhancing the body of knowledge from a tax perspective. Now, all of this plays a role in helping us to make sure that we attain our mandate. And if I remind us once again, key to our mandate is the collection of all revenues that are due, enforcement of tax and customs laws, as well as facilitation of legitimate trade. So all these reasons I've cited, 4 reasons I've cited above, they enable us collectively to be able to pursue our mandate as a revenue authority. The audience that we continue to see taking interest in our work, in fact, when I checked yesterday, we found that in our tax statistics page on our SARS website, we have seen roughly about 13,500 visits, and we have seen the publication that we're going to discuss today being downloaded around 615 times. And this, for us, tells us that the consumption of these tax statistics is prominent out there, and we want to continue to enrich it going forward, hence the engagement that we are having today. Who are the audience that we are starting to see garnering increased interest in these bulletins. Academia, of course, policymakers, researchers, the members of the media, particularly financial journalists, local and international universities, government departments, financial institutions, the general public, the bodies, multilateral bodies such as the IMF, the OECD, BRICS, as well as other countries. We are finding a growing interest from these other stakeholders to utilize the tax statistics that we produce. And again, we are living in a data age. Big data is quite key, and we are seeing a growth in the sheer volume of data that is becoming available to tax administrations, including SARS. And from that perspective, we are being enabled to unleash an unprecedented wealth of information that evolve itself into knowledge that we are able to pursue as a tax administration. What will you get out of this bulletin that we have published if you've not yet gone through it? The readers will find that we do touch on the results of tax broadening, tax-based broadening. You'll find that there is a number of reflections around individual taxpayers that are coming through, companies that are coming through, trusts, employers, as well as VAT vendors that we are seeing. We quantify these and we make reflection in the various chapters of the publication. We also are reflecting on some of the importers and exporters that we have registered. We look at some of the key indices such as the tax to GDP and the changes over time and the drivers behind those changes. We look at the tax revenue buoyancies and the changes over time, tax structure, emerging trends, patterns and risks to revenue, which is quite important for us to keep a finger on the pulse on. Impact of tax policy changes. We also reflect on IRP5 data, tax returns and individual taxpayer data, taxable income and tax that is assessed at municipal level, at sector level, etc. We also look at VAT efficiency factors and changes over time. And these issues are quite important. I'm just highlighting a few that you'll find in the bulletin. And they are quite fundamental in policy making, and they are quite fundamental in research. They are also fundamental in day-to-day business decisions that business executives make in the private sector, but as well as in the public sector. Now, we have moved quite in the evolution of these tax statistics, we've moved quite away from the first release in 2008 to the current release that we will be discussing today, which is the 13th edition, published in December 2020. And you will see that we do reflect the tax years as well as the fiscal years 2016 to 2019 in tax years, as well as 2015-16 to 2019-20 fiscal years in the bulletin that we are providing. But more so, we try in Chapter 1 to make sure that we link this bulletin to the strategic objectives that SARS has been pursuing and continues to pursue in its Vision 2024. If I move towards the global trends and the standards that we are seeing, you will also note that SARS, in its strategic objectives, has committed itself to work with and through stakeholders as varied as they are. And in line with this, we have sought to reconnect with global bodies that we deem to be quite key in the work that we do. And in this way, and in line with this bulletin that we are publishing today on tax statistics, you would note that these tax statistics feature quite a great deal on the OECD revenue statistics in Africa, which sees roughly around 25 countries that participate. And obviously going forward, we seek to increase the number of countries in the African context that participate in these Africa tax revenue statistics from an OECD perspective. So we partner continually with the OECD to make sure that these tax statistics are featured in the African context, because of course we are existing in the context of an African continent. But further, these tax statistics that we are discussing today and workshopping today, They form part of the global OECD Global Revenue Statistics, which provides comparable and reliable tax revenue data for a large number of countries, in excess of 100 countries from all regions of the world. But further than that, these statistics that we will be workshopping and talking to today are significant in that they are also part of the African Tax Outlook publication that the African Tax Administration Forum presides over. And we are glad to partner with both the ATF and the OECD through our colleagues as well at the Treasury to make sure that we work with these stakeholders and through these stakeholders to make sure that these statistics feature in the broader landscape of the tax ecosystem. Now, we continue to want to build skills in the data analytics, in the IT space, to make sure that we are able to handle statistics such as this and many other data that we deal with in the Revenue Authority. And with building up this capacity, and you would have seen quite an intense drive towards building the skills, recruiting the skills, this we believe will result and assist us in the expansion of the scope and enable more tax data to become available in a better refined format. Now, as we move forward, I think it's important to just highlight a few things that you should expect from us going forward in terms of the publication that are going to come, or the editions that are going to come going forward. One of these things is to make sure that the immediate aim is pursued, which is to build a modern, enhanced system for the statistical publication and secure the electronic connection with users that will be a comparable system to leading countries in this space. So how do we make sure that we are able to interface electronically and make these statistics available on an ongoing basis in a refined manner? Furthermore, you can expect going forward that as the quality of administrative records improves, driven by improvements in technology and processes that we apply, further uses of these records will emerge. The potential use of spatial components of tax records remain to be explored going forward. And we think that there is opportunity in this particular area, and we continue to work with, amongst others, the National Treasury to see how we can be able to improve this, working with other stakeholders at a municipal level and at other government levels to ensure that we are able to enhance this particular aspect. Furthermore, we want to improve the availability of actionable knowledge for SARS, as technology, data, and data analytics and machine learning will make us more effective at collecting, transmitting, storing, and analyzing, as well as acting upon the data that is available. So we don't only want this not to drive any actionable benefit for the fiscus. We want to make sure that as we improve on the tax statistics that we produce, that this helps us to be able to derive actionable insights that can help us to improve the tax ecosystem. SARS will in the future deploy the latest time series-oriented database systems, which will include software that provides fast, direct access to data in tables, charts, and spreadsheets, so that those that are interested in doing in-depth research in particular can be able to do exactly that. The data content will be expanded, access broadened, and frequency of updates will be improved. These are things that we are working on in versions that are still to come of the publication. The governance structures will be tightened by the establishment of the Statistics Committee for the publication. We continue to want to make sure that there is integrity in these statistics and that taxpayer confidentiality is not compromised as we continue to work on this. In conclusion, I would like to reiterate that an effective tax revenue authority plays a critical role in developing a capable state. The tax statistics bulletin that we publish annually is not just a long list of numbers. Assuredly, it is more than just a set of numbers. The publication represents hard work of many SARS employees, compliant taxpayers, and other stakeholders that we engage with in the ecosystem. and as such, the publication represents a concrete form of a social compact aimed at advancing and progressing our country. As I conclude, I would like again to say we welcome the opportunities from our partner, from other various stakeholders to engage with us today, and all our work that we continue to do is towards helping South Africa to achieve its developmental goals. We exist to pursue a higher purpose, which is enabling the government to build a capable state that fosters sustainable economic growth and social development that serves the well-being of all South Africans. I'd like to stop here and thank you very much for the time afforded. Thank you, Chair.
Thank you very much, Johnston, for that insightful and information. That which you are able to measure, you are able to improve indeed. And at this point, ladies and gentlemen, those that are here in the room as well as those that are online will welcome comments and questions. All right. In that case, we would then move on to the next item on our program, which is then the crux of opening up or setting context for this workshop so that then the engagement and the interaction will follow. We'll get a presentation from our colleague, Ms. Mamiki Liolo, on the highlights and trends from the 2020 tax statistics publication. Welcome, Mamiki.
Thanks, Program Director. Okay. I think I'll instead make my presentation from the table. I will not be going to the podium if you don't mind.
You're welcome to do that, ma'am.
And with regards to any questions that may arise, we would prefer that we proceed with the presentation slides and take questions at the end of the presentation. Even if it's questions about maybe going back to a particular slide and elucidating further on that particular slide, but we prefer that we go through the entire pack first and then take questions at the end of the presentation. The substance of the presentation pretty much is guided by how the tax statistics publication is designed. We will give you an overview of what the SARS at a glance looks like. This is more an executive summary of what are the key data points you should be looking out for when you're delving into the document. We'll sort of give you a highlight of some of the key taxes that are administered by SARS, and then give you a sense of how the publication has evolved since the 2008 publication, and then bring out the highlights from each of the chapters that Johnston has already indicated. We will then take you through the concluding slides, looking particularly at some of the points that were raised at previous workshops, some of the content that our users and readers have raised before, and maybe just give progress on some of those requests, and obviously then take on new requests on board to see if they can be incorporated into the 2021 tax statistics publication. Okay, the slide that you see, it's meant to give a summary of the entire publication, but in a way that is easy to consume. We hope that it is easy to consume, so we always welcome your comments and feedback as to whether you can follow the logic of this particular slide. I am going to use the laser pointer. I hope that it is reflecting on the YouTube link. And I think for those that are with us here at the Large Business Center, you'll be able to follow with me. But the essence of it is that if you look at the first blocks that are in red, they sort of give you a sense of the data points that are contained in each of the chapters, starting from chapter 2 to chapter 4. And in the second block, marked in blue, would focus on PIT and give you a sense of what you'll be reading and what are the key data points that are summarized in PIT. think I will still go into explaining further what the trends are that we're picking up. The third block would be around CRT. Again, the data points there around the tax register, the expected to submit and active returns, as well as what the assessments, payments, and refunds that we're picking up from this particular tax product. Same thing in green in VAT, and the last column in olive for import taxes or import-related taxes. At the bottom there, we just also give a sense of what the collection numbers look like, so that you have a sense of the major taxes that we're responsible for administering, which ones are we most vulnerable to, and what are the trends that we're picking up over time. Apologies for the delay. And therefore, I think maybe just the first key points that we want to highlight in this particular slide, it's obviously at the bottom there, that would be the talking point around what are the big contributing taxes, and then, like we said, what are the taxes that we're most dependent on. PIT being the big one, you'd see that if we include pay as you earn in our PIT numbers, we are accounting for about close to 39% of our total taxes. If you look at the PIT collections as a percentage of GDP, that's about 10.3%. So it's a very clear indication that in terms of our percentage contribution of of PIT, it's quite significant. And in its significance is followed on by VAT, followed on by CIT, and those three taxes collectively account for about 80% of the taxes. If we look at the tax base that informs our register, you'd see there that in terms of the PIT register, we've got about 22.9 million taxpayers in our register. If you just measure it over the past 3 years previous to the reporting period of 2020, that you'd have seen an increase of about 3.4, 5.1, 5.6% in terms of the size of the individuals that are active in our register. As a comparator, we also look at other data points. Johnston has also mentioned Tax Statistics South Africa, that when we sort of look at the trends of our PIT register, when we test it against the trends that we're seeing on the quarterly employment survey statistics, that the two sets of numbers move in a similar direction. Similarly, a similar exercise would want to incorporate to give a sense of what we're picking up with regards to our CIT data, our CIT register versus our CIPC register, and just looking at the congruence between the two sets of registers. What we also want to add on as part of this particular slide in future is give you a sense of what the effective tax rates have been for these particular tax products. If you look at later on chapters, you'd see that PIT tax assessed as a percentage of taxable income has in fact increased from around 20.4% in the 2016 tax year to 20.7% in the 2017 tax year to 21.6% in the 2018 tax year. And for the 2019 tax year, this effective rate was about 22.5%. Why we're mentioning this is to give you a sense of how much we're actually able to collect or extract from the tax base. Same thing, if you look at the ratio for CIT, this number was 27.9 in 2016 tax year, 27.7 in 2017 tax year, and in the 2018 tax year, that number moved to 27.4. Again, very useful for us to read some of these numbers in the context of what the tax base looks like. One of the questions that has come through quite a bit is with regards to the register for customs and excise. As you can see here, we've mentioned only the importers. We do have data sets for participants along the value chain, be it clearing agents, registered and licensed manufacturers, warehouses, freight entities. But I think for us right now, for purposes of the tax statistics, we look at taxpayers or entities that add to us understanding the payments that we receive, us understanding the returns that we process, and us understanding the refunds that we pay out. And therefore, that's why these have been the crux of our focus in terms of what our register looks like. I think for us also just to emphasize that we continue to make sure that the data that is made available is in aggregated format to ensure that taxpayer confidentiality is maintained at all times. The next slide that I'm going to sort of talk to just talks about, at high level, what are the main taxes that SARS collects. And why we sort of have to mention this is that particularly when you're doing comparison of our statistics with those that you see from international publications, you need to understand what is our accounting or national accounting structure. We subscribe to the government financial statistics classification that's prescribed by the IMF or the International Monetary Fund. And in terms of that, there's a couple of sub-classifications that we need to allocate our taxes to. And as you can see on the screen, these classifications speak to, first of all, taxes on income and profits. That's the first lot. And I think a lot of us are most familiar with this with regards to the income taxes that we pay, as the CGT, the liability that may have been raised against that. For those of us who are earning salaries, the pay as you earn that our employers deduct. But all of these fall under the main bracket that's called taxes on income and taxes. The second one, paid taxes on payroll and workforce. Again, if you sort of had to compare us with international peers, that for us, the big one is skills development levy. But in some instances, some countries would have similar, will have social contributions that will be included in this, which we don't have technically as South Africa. The next lot of taxes that you'd see is taxes on property, followed by taxes on domestic taxes on goods and services. And then the last two buckets that you see is taxes on international trade and transactions, as well as non-tax revenue. What's important here with regards to the taxes that SARS collects that we want to highlight in the 2020 tax publication is that if you see the new taxes that we talk about, most of them have been introduced particularly in the space of domestic taxes on goods and services. So you see that in 2019 budget review, there was an introduction of carbon tax on fuel levy that was introduced in June 2019. 2018 budget review, there was a health promotion levy on sugary beverages that was implemented. You can see that that we've highlighted there. There was also an introduction of contributions to the International Oil Pollution Compensation Fund levy. Previous to that, in 2016 budget, there was an introduction of the tire levy, introduced in October 2016. Previous to that, we had a withholding tax on interest, which is charged on interest paid. I think that sits predominantly under taxes on income and profits. And then at some stage, we also had a pipeline levy, which was a temporary levy introduced between 2010-11 and 2013-14 on both petrol and diesel to help fund the new multi-product petroleum pipeline between Durban and Gauteng. Why we're mentioning this is because some of the numbers, as you read them, you have to have an understanding of how the structure and the composition of our taxes have changed over time. We also just have to also mention that when we sort of go into some of the numbers that we publish, you'd see us mentioning some of the taxes that have already been repealed, such as stamp duties and mining leases and ownership. So we continue to account for these mostly residual transactions relating to these taxes, just to make sure that we account for its full accounting period or its full tax period until it's fully exhausted in our records. Then the next area that we sort of want to highlight is for each publication that we issue out, we tend to, oh, sorry, not this one. Sorry. For this, we just want to highlight here with regards to the evolution of tax statistics that our first publication started into December 2018, so to December 28, 2008. You'd see that at the top there, this is what it looked like. Very simple document with very few graphics, if you may, with very few analytical content. And if you compare it to the publication that we have at the moment, and on the platform, we also have the actual publication, the last published publication of the 2019 version, just to give you a sense of how rich it is in terms not only of content, but in terms of the analysis that has been put into the publication. One of the things that we thought maybe we could highlight is just to look at the aim of the publication. We acknowledge that there are many publications and there are many official sources of statistics, the Stats SA being one of them, that we do provide this as a supplement and obviously as a much more detailed review of the information in supplementing the National Treasury's budget reviews as well as SARS's own annual reports. We aim at providing comprehensive tax revenue data, complementing and contextualizing economic and demographic data that's provided by other publications in order to provide and give highlights to the socioeconomic trends. The last bullet point under there is to provide valuable data on taxpayers, the tax base, and understanding the socioeconomic profile of our country so that when you compare how we're performing, when we look at the revenue collections that we report on, that we have a context of who we are in relation to our comparable peers. In the slide, we also then just indicate some of the key data points that you will find in the first publication, some of the data points that you'll find on the latest publication that perhaps were not necessarily there as we started in the earlier years. And I think with regards to this particular slide, it's just also acknowledging that this is a joint publication. We are in partnership with National Treasury, so you see that in most of our branding of this particular tax statistics publication, we carry joint logos of both SARS and National Treasury. Okay, not to go into too much detail about this slide, suffice to say, we're just indicating that in each publication, we sort of highlight what are the new things that you'd pick up from the publication and what would be the underpinning tax policies or fiscal policies that would have affected the outcomes of the results that we're going to go into in just a short while. So when we're looking at the 2020 tax statistics, one of the things that we sort of want to highlight first of all is acknowledging that we are embarking on a new path, a new journey, the SARS Vision 2024, and in that there's 9 strategic objectives that we're striving towards. So we have put that as a point of emphasis in our publication. Second point of our publication is just to indicate that there has been an impact in terms of policy changes with regards to retirement funding reforms, which became effective in 2016. And one of the things that we want to just sort of give a sense of is how the legislative changes in Section 11F, which replaces Section 11K of the income tax, and how it has affected the personal income taxable income base. Then in terms of key provinces, this time around in our publication, we looked at the province of Mpumalanga. Again, when you're now reading some of the numbers with regards to the 2020 publication, please just bear in mind that the outcomes that you'd be seeing would be affected by some of the key announcements that were made in the budget review. Some of them include the following: the increasing the tax-free thresholds for personal income taxes from 78,000 to about 79,000, and that there will be no changes made to the personal income tax brackets, the introduction of carbon tax on fuel, and increasing the eligible income bands for income ETI, employment in tax incentive. Why we mention this is that when you're sort of looking at the trends, there has to be an underpinning understanding of what would have changed in terms of policy to drive some of the numbers that you see. Okay, we're now going on to the first chapter of the publication. Again, if I'm going a bit too fast, and if there's a slide that you may want me to come back to, you're more than welcome to ask us to do that. But I think for us, the key points to highlight with regards to this particular chapter is that it gives you an overall view of the South African tax system. So most of the content that you'll be seeing in that particular part of the publication remains pretty much consistent throughout various versions of the publication, as we don't change a lot of the taxation systems. We may be changing some of the policies, but not necessarily the underpinning tax system. We then give you highlights of the register, the tax policy, and just also understanding what are the differences between our consolidated budget and consolidated revenue. And then in the last three buckets, just looking at revenue by main categories, the cost of collections, as well as understanding our collections by various collection channels. In each of the chapters, you're going to see what we call our infographic, sort of a highlights page. Again, if you want to consume the data quickly and you just want to get a sense of what are the main speaking points in each chapter, we've already spoken to the fact that there's been a growth in our revenue collections when we talk of the 2020 publication, that we collected about 1356 billion. That represents a growth of about 68 billion, 5.3, and that growth came mainly from PIT. In terms of the compounded annual growth, that has we've still seen a growth of about 6.1%. There is a slide much later on where we can also see how much that growth has slowed down. The compounded annual growth has slowed down over different periods that we've gone through since 1994. In this slide, we also just give an indication of the breakdown of our revenue sources, comparing the previous year to the current year. I've already spoken about the fact that we need to also compare how well SARS is administering or using its resources to collect taxes. And one of the measures that we use is the cost of revenue collection. So for the collections that we sort of reporting on, how much did we spend as SARS to make those collections come through? And then we also sort of give a sense of the various channels that we use for collecting revenue, the biggest one obviously being e-filing. And again, when we're now starting to think about what we've gone through last year and this year with COVID-19, when we start preparing ourselves for the 2021 publication, what would that look like? How would this profile have changed as more people obviously could not go to banks to make the deposit that they normally would have made, and have had to make use of electronic channels for paying? Then the last key indicator there is just to give you a sense of what the tax relief has been offered between 2015-16 and 2019-20, which, as you can see on the screen, is about 92 billion. Okay. The next slide, I know it's quite a number of data points that we're speaking to, but again, sort of setting the context to what kind of conversations should we be having when we're trying to unpack and understand the main drivers of revenue. So the first one, we sort of make reference to table 1.1, which talks about our register. We've already indicated that there's been some growth that we've seen in terms of our register, and particularly the growth that you would have seen if you look at from the past 5 years. We would have moved from about 19 million to around almost 23 million for individual taxpayers. And some of the reasons why we would have seen that growth is coming through from the revised employer filing and employee registration process that was introduced in 2010. Then this requires employers to register all individuals and issue them with an IRP5 or an IT3A certificate regardless of the amount of income earned. That also then pushed a lot of individuals that normally would not have registered to eventually find themselves formally on a register base. And therefore, that has sort of given us dividends along the way as more and more people came into the tax base to be registered. Second one that I maybe want to highlight is that for the same reporting period that you've got on the screen there, you see that our companies registered has moved from around 3.3 million to about 2.5 million during this period. We've moved from 2 million to about 2.5 million in the year 2018-19 to the year 2019-20, as companies became active and continued to register at the Company and Intellectual Property Commission, CIPC, with the latest average registration time of 1.45 days published for the 18-19 financial year, which is an improvement from the prior year of 1.78 days in the 17-18 year. So you'd see that overall, when we if you read through our publication in the earlier years, there was a concerted effort to clean up on companies' register, but also then making sure that we are a lot more aligned to what the CIPC data set is looking like. Obviously, it would be nice to talk through some of the big drivers of some of the other taxes, the tax base, but let's move on and skip on to see what the numbers are looking like. Here is just to highlight to you what the economy has done over the period. So if you just look at where we were in 1994-95, at a nominal GDP of about 500 odd billion, that has obviously grown leaps and bounds to about 5.1 trillion, which is the number that we are looking at in the tax statistics period. One of the other things that we look at is obviously the tax policy, fiscal policy. This is either money that we sort of gain or money that we lose through some of the proposals that are announced in the budget. And in the main, for the 2019 budget review, the tax proposals were designed to increase revenue collections. The revenue measures were expected to raise an additional 15 billion in 2019-20. And this was, the proposals reflected government's commitment to narrow the budget deficit and to stabilize debt. I think the numbers there are quite self-evident as to what were the big drivers that were expected to bring in the big amounts with regards to fiscal policy. Then finally, just on this particular screen, looking at the tax rates, obviously looking at the maximum marginal tax rates across most tax tabs. This you can pick up from table. So what we've also done is that for each of the tables that you see as they are, you can quickly also go into the publication itself to look at some of the data sets if you've got questions and you've got some clarification that you need. So for us, looking at the maximum marginal tax rates for EPIT, that has increased. You see it's moved from 41% to about 45%. The data points that are marked in bold is just to indicate periods of change as years progressed. With regards to dividend taxes, you would have seen that that has also increased, moving from about 15%, that also increased to 20%. Similarly, when we look at VAT, you are all familiar with what has happened in the past 2-3 years when we increased the VAT rate from 14% to 15%. I think for us also, as we're now sort of preparing ourselves for the 2021 publication, the big talking point that's going to come through is with regards to CIT, which you're seeing on the screen there as remaining relatively unchanged. At some stage in our economy in South Africa, that maximum statutory rate for CIT used to be in the region of about 50%. So we also need to understand that some of these numbers, as you sort of track them over time, that it tells the story of who we are as a country and who we are in the context of what's happening globally. Okay, let's go on to the next slide. I'm not going to spend too much time on this particular slide. It suffices to indicate that, again, if you just look at the key speaking point for us as SARS, is that SARS remains a very significant contributor in terms of our consolidated budget revenue, our consolidated revenue at about 90%. What are the big items that sort of contribute to our consolidated revenue? Not only SARS's revenue collection, but some of the non-tax revenue that comes through from various sources that we're going to go into quickly, but also what then gets deducted from our consolidated revenue is the contributions that we make to SACU payments. So when we do get to Chapter 6, you will also see what the implications that are for our overall fiscal position, and then obviously looking at other sources of taxes. But I think the big talking point here is just to indicate that SARS remains a big contributor in terms of the overall national budget frame. One of the part of a country's output that is collected by government through taxes, the tax to GDP, is an important indicator to measure the tax effort of government. Internationally, it's used as a comparative for comparative analysis of the tax systems and economic performance of different countries. And as you can see here, over time, we've sort of also tried to use the scale from 20% to around 27%, because just to give you the narrowness of the band around which our tax to GDP extraction has happened. Of the low points having come through since our democracy having come through when we went through 2003. The high points that we experienced is when we went through the commodities boom, and then we saw in 2009, obviously, the impact of the global financial crisis. But we can sort of go into those kind of details as the need arises as to what the big drivers were for some of the trends that we see. As you are aware, we sort of try and pull in all sorts of fiscal ratios together so that we can sort of have a complete picture. One of the pictures that we also look at is the tax buoyancy. Just a few snapshots of sorts, a few points to mention there, that the tax revenue collections have remained buoyant after the 2008 and 9 financial crisis, despite the tough economic times. When we sort of went into 2016-17, we saw that that the tax revenue collections did not keep up with the economic growth, resulting in a buoyancy just below the unity measure of 1 at about 0.97, and then that started to improve with 2017, the numbers starting to be on par with the GDP growth. I think also what's very important to remember is that what is key in terms of the design of our system is that in some instances where GDP has fallen, you would ideally want to see also your revenue falling in line with that. And as GDP rises, you'd want to see your revenue rising in line with that or slightly above that, just to bring in the automatic stabilizers in your revenue source. So when the economy is suffering, you want to make sure that you don't extract too much out of the economy to sort of bring an automatic stabilizer. Similarly, when the economy is picking up, that you sort of take on the pickup and you collect a lot more. And I think maybe I will skip the more detailed analysis on that for later, but just suffice to say that this is one of the fiscal ratios that we look at. The next slide that we sort of are highlighting talks to the constituent parts of our taxes. On the left side, you're looking at what the revenue collections have been in the bar graphs. We're looking at the revenue as a percentage of GDP in the green line, and then the nominal GDP as well as the CAGR of revenue over time. You can see, as we have mentioned earlier on, the CAGR of 6.1. What's also important to look at is over time what the CAGR has been, or the compounded annual growth rate has been for the various taxes for companies. You see that has grown and started to slow down in the 2019 year for companies. That also was very strong when we went through the commodity boom, and that has slowed down and has, in fact, come down quite significantly. We haven't seen the recovery that we would ideally wanted to have seen when we went through the 2005-6 period. With regards to VAT, that has also come down quite significantly, the growth. So giving you a sense of what has been the main drivers of our taxes over time and what has been the laggards with regards to taxes. The next two slides that I'm going to sort of skip through is just to give you a sense of the graphics that we've been playing around with. It's just to see, does it make sense? Can you read it well? Does it convey the message that we want to express with regards to what we're picking up? So it's similar to the previous slide, but just indicating, I'm going to take maybe as an example, PIT, that's the top left. I had to practice with my hands, the left and the right. Top left, PIT, you'll see that we sort of are marking the years from inside to outside, inside being the older years and outside being the younger years and obviously the bigger collection years, and just giving you a sense of what the percentage contribution, how that has changed over time, and the contribution ratio of PIT as in relation to the other taxes, or in relation to the total taxes. So I think comments would be appreciated as to whether the graphics that we're sort of supplying give a much more clearer perspective, or maybe clearer way of reading the data. Okay, I'm going to skip through this one. It sort of conveys the same message. And I think here the key thing that we wanted to sort of highlight is, as you can see, that our CRT collections in orange at some stage were big drivers. They were quite a big, key contributor in terms of collections, in fact, surpassing VAT. And that has come down quite significantly. And just in terms of some of the key reasons why, looking at what has impacted on the sort of slower contribution of CIT, the contraction in the major contributing sectors. The major contributing sectors would be finance, manufacturing, particularly for the large business segment. In the interest of time, I think I'm going to skip this one, but it's sort of conveying similar messages. Here, it's just for us to say, as an administrator, it's always useful for us to also be tested and be measured against other peers to say how much are we spending and how much are we collecting, and this is the ratio that we sort of apply. We've tried to make it very simple in terms of in the blue graph, it's just what our operating costs have been, and the red line indicates what the cost of revenue has been over time. And it's very clear that although we have been given some money, a bit more money than previous years, that has sort of started to plateau. Whereas in terms of the cost of revenue ratio, because we're collecting a lot more revenue, that you're seeing that cost of revenue ratio coming through to below 1, and last year showing at about 0.8%. I've got a lot more points that I wanted to just highlight here, just to also indicate that this ratio does not include non-tax revenue and social security contributions collected by SARS, such as the mineral petroleum royalties, the unemployment insurance fund, as well as the road accident levies. And if you had taken that to account, this ratio that you're seeing in red would have been, in fact, much, much lower, because it's still SARS resources and SARS efforts that are responsible for bringing in this non-tax revenue. Okay. And I think the example that we've got here is to say that if administered revenue instead of tax revenue was used to calculate South Africa's cost of revenue in 2019-20, the ratio would drop from 0.8% to 0.76%. So it's quite a clear indication of how SARS has tried to give its best even under the toughest of circumstances. This slide, again, new graphics that we're introducing just to give you a sense of the channels that we are using in terms of the composition of the channels by payment, by value, the big amounts coming through from e-filing, and in terms of the number of payments that you see, that if you compare payments at banks payment at banks value versus payment at banks number, that's the number of transactions that are still being processed by the banks on our behalf is quite substantial. Therefore, I think for us, what we're looking out for is the 2021 publication is the impact of COVID and how that may have shifted this particular picture. Oh, okay, and sorry, then the last graph with regards to chapter 1, just to give you a sense of, again, we sort of put in a wheel chart. So this is monthly collections that we have sort of put in an anti-clockwise, giving you a sense of visually, if you just look at the largest one that juts out, would be December, February, March, and then followed on by September and June. Just to indicate to you what are big collection periods. We have in the heading itself, we sort of indicated to you why we have those big collections coming through from our CIT provisional payments from companies with year ends that coincide with these months. More importantly, if you just also look at the last 2 months, there's a couple of payments that come through there that normally don't happen. In the February, you will get quite a bit of significant collections from provisional payments, but this time around from small and medium-sized enterprises. In the month of March, we also have payments that come through from the 13th deferments from customs clients who may be deferring some of their payments, and those payments become due and payable still in the month of March. What's also important to highlight is just the quarterly patterns as well. So if you sort of start seeing significant shifts in our collection patterns, you also have to bear in mind as to during which quarter those shifts in our collections would have happened. So I think we can move on to maybe the next chapter, Jay, if that's still fine. This one chapter is the chapter that sort of brings in the most number of questions. I think maybe because all of us are affected by this, so there is a bit of self-interest when it comes to questions on this particular item. Again, so we've sort of highlighted to you on the screen what you'd see as summaries. I'm not going to go into the details of each point, but maybe just to indicate for the 2019 tax year, how many were the returns that were expected to be submitted. You see there expected returns to be submitted, how many were assessed, 4.3 million assessed returns versus expected to be submitted returns of about 6.3. And then if you just look at the actual numbers, what does it then translate to? That you're looking at tax assessed of about 360 billion with taxable income of around 1.6 trillion and giving you an effective tax rate of around 22.5%. Again, I think in my introductions, I sort of spoke to what the numbers have looked like over time. It's always useful to track whether we're sort of extracting more, we're designing our policies in a way that brings in a lot more revenue. What's important and very interesting that is what we also look at our data sets from the municipality's perspective. I think we may get additional questions regarding that. That would be interesting to see what people may have questions about with regards to the spread, the geographic spread of our taxpayers. So this is the highlights page again, continued on this slide. Just to give you a sense of, for those that we assess, how many eventually start owing SARS, and those that were assessed, how many had a zero assessment, and then how many received refunds. I'm not going to ask how many of you fall into the last category of receiving refunds, but I can see from some smiling faces that probably some of you are in that quite significant bundle of people, that about 68% of the taxpayers that we assess, eventually assess. So they would have paid pay as you earn throughout the year, deducted by the employer, and eventually when they submit to us through filing season, we then make the final reconciliation and we say, you owe SARS so much or SARS owes you so much, that you see that one of the things that does translate to a benefit for most taxpayers, that if you submit your tax matters and SARS does in fact owe you, that you see that a huge portion of our people that we assess do in fact get a gain in terms of refunds that SARS pays out. In terms of where most of our taxpayers, mostly in Gauteng, are based in Gauteng, in terms of residents, and in terms of age brackets, ages 35 to 44. We also then say, what do we pick up from the returns in terms of the largest allowances that are claimed, travel being the largest allowance that's been claimed, with regards to the largest deductions that we sort of grant. It's with regards to contributions to provident, contributions to pension, provident and retirement annuities. Apologies about that. And then with regards to the largest fringe benefits is contributions that the employers pay on behalf of their employees. That is a significant portion. I've skipped one slide that in the past we used to show. I think this time around we want to show it from a different perspective. Again, when you see us quoting the exact table number, that's exactly where you're going to find it in the publication. That just gives you a sense of if somebody was earning taxable income of this much, 22,000, and you sort of had to look at it a couple of years down the line, it was R1 million. If you had to state it in 29 terms, what would that look like? So if you were earning 22,000 in 1995, in 2019 terms, if you had to sort of take inflation into account, that would be the salary, 88,000. If your salary was $1 million in 1995, in 2019 terms, it would be around 4 million. And we sort of then gave a sense of what were the tax rates in 1995, 2019, if we applied to this 1995 number, and what are the tax rates, 2019 tax rates, if you apply this 2019 number. And you sort of get a sense of what the effective tax rates would have been. At that time in 1995, for the lowest bundle that we get there of 22,000, it would have been 10.8%. If we did not make any adjustments, this number there, the 22 million, if you had to sort of apply the 1995 tax rates, would be 32, effective tax rates of about 33%. But because there are many interventions that we've put in place to make sure that as your salary increases every year, we sort of don't push you automatically to higher brackets, that you remain in the lower brackets. It means that your effective tax rate has remained quite low at about 2.1%. Whereas if you were R1 million earner, that amount has sort of remained in the 40% region, which means that it speaks directly to the progressivity of our income tax, particularly when it comes to personal income taxes, that as the more you earn, the more taxes you pay, and the lower you earn, you carry the lower burden of the taxes. So I think this sort of gives a context to the numbers. The next slide. We sort of wanted to also say that when you're looking at some of the tax products, you may want to cross the floor, not only look at PIT in isolation, but also maybe look at PIT and CIT, because they're both income taxes and the income tax laws sort of apply to them. So here we just wanted to show PIT. When we sort of speak about provisional payments that we receive, we get the first provisional payment, second provisional payment, third provisional payment. What does the profile look like of the first, second, and third provisional payments for individual taxpayers in comparison to corporate taxpayers? So you see there that if you look at the first provisional taxpayers for individual taxpayers, these are in the top table is in tax years, the bottom table also in tax years, that you see that about 60% of our revenue that payments that we receive from individual taxpayers come through as second provisional tax payments. Whereas if you look at for corporates, they sort of keep it sort of on an even kilter and pay very little as a third provisional or as a top-up. Also very interesting to see just in terms of the payment dynamics that we see from our individual taxpayers in comparison to our corporate individual taxpayers. We do have a lot of notes that we sort of highlight there, but I think it gives you a sense of why this is important for us to look at. The distribution of our tax base, I think, again, sort of speaking to, we're sort of trying to use different kinds of graphics to it to show that in terms of the number, you'll see that in the green part, these are individuals that are earning between 70 and 350,000. Whereas in terms of the taxable income, they would contribute quite a significant portion, but when it comes to assessed tax, they are on the lower end of the contribution. So I think for us, it's also just to give a sense of what's the contribution ratio that we're picking up from our individual taxpayers, not only in terms of the numbers of entities, but also in terms of their contribution to overall revenue. The next table, I think it's an expansion of what we spoke about earlier in the highlights document, in the highlights page, just to give you a sense of the proportion of the allowances of the deductions that were granted to taxpayers in the 50,000 plus income tax bracket. The largest portion came through from those taxpayers. I think here it's just to give you a sense from the table itself. If you look at across this 70 to 300 to 500,000 tax base, just what they've been claiming over the years and what the taxable income before deductions have been. Okay, one of the things that we do, and we do it across the three main taxes, is also to look at taxpayers. For all sorts of reasons, some taxpayers come into a particular tax year, they declare they are economically active, and therefore we can sort of see not only the income and the deductions that they're claiming, but the consequences of that in terms of our tax amounts. But then the next year, they don't appear at all. So what we've done is to look for the three main taxes for PAT, VAT, and CIT, to look at the cohort of taxpayers that consistently each year are active filing and active filing and in a tax base. And we sort of want to track them over time to get a sense of what does their profile look like, given that they are constantly employed or constantly earning some kind of an income as individual taxpayers or as corporates that every year they are active and are submitting their returns. And for VAT vendors, similar picture, because I think when you sort of start unpacking it like that, you also get a different kind of sense of who and what is driving South Africa's economy and what is driving South Africa's tax collections. And in this particular instance, it's just to give you a sense of the proportion of the cohort of the 2.9 taxpayers by marginal tax rates for the periods 2009 to 2018. It shows that the taxable income shifted across the tax brackets due to increases in the taxable income and also obviously other market-related factors. But I think what's important for us to see, maybe some of the sub-bullet points there, that the average taxable income of all assessed taxpayers increased by CAGR of 7.8%, and the average income for the cohort of the 2.9 taxpayers increased by a rate of 8.7 during the 10-year period. Again, if you look at that number and you say, what has been the average salary increase over this particular period, you see that these individuals that you're seeing in the cohort actually grow, the assessed that as average taxable income has been growing by a number that's slightly above what you would on average see. Similar kind of trends that we're picking up when we're looking at our company cohorts and we're looking at our VAT vendor cohorts. And maybe here just to pause, in terms of some of the work that has then been derived from this kind of statistics that we pull out, is that there are lots of research papers that have been prompted by these kinds of insights that we're pulling out to see individuals who continue to be every year employed for all the 12 months or most of the months of the year, what does their situation, financial situation look like in comparison to those that may be dropping in, employed for a month, employed for 2 months, and then maybe for the next year not employed, because their average growth of what we call their taxable income sort of has a different profile and a different percentage to it. For PIT as well, one of the things that has come through from other chapters, they have asked for the same data. At the moment, we have indicated that we are not in a position to do so. And one of the things that we sort of want to highlight, again, when you're looking at this graph, is to see that this is what the tax base looks like in terms of the number of taxpayers by SARS Office of Registration. You'd see there that obviously the big one is Gauteng in terms of contribution, 49%. But if you sort of put the two sets of numbers in back next to each other, you'd see that if you compare it to the individual as per province of residence, that if you look at the Eastern Cape, what their numbers are in comparison, theirs is 310 versus the 307. If you look at the bottom there, Western Cape, 350,000 versus average taxable income of around 364,000. So I think it just gives you a sense of where some of these numbers may be differing in terms of Office of Registration versus Office of Residence. So I think that particular phenomenon and gets sort of multiplied and compounded when you're looking at CIT and VAT-related data. So that's one of the things that we sort of are working through. There are, again, a lot of projects and interests and collaborations around geospatial data that Johnson has mentioned before that we want to get into to make sure that we are able to provide similar data for all the taxes that we administer. Some of the key things that we've picked up with regards to this particular slide is besides Gauteng, which includes City of Tshwane and City of Joburg and the Western Cape, the metros and municipalities, we showed an average taxable income above 400,000 in 2019, which is like in red, include the following: the Ilundini local municipality, that's in the Eastern Cape, that's around 406,000 average taxable income. That's the only municipality in Eastern Cape that is in red. That's the highest. You see also Maruleng local municipality in Limpopo, Bapalabura local municipality at around 407,000. The Greater Tubatse Fitakhomu local municipality and Tabachweu municipality. Again, if you start unpacking what are the underpinning economic activities in some of these municipalities that I've just mentioned, the growth that you're seeing in terms of the mining sector, etc., that's feeding into this number. What we're also seeing is in the Northern Cape, the Tsantsabani local municipality and the Khara local municipalities at around 400,000 and 500,000 taxable income, average taxable income respectively. They continue to remain the top tier category in 2019. Again, if you underpin what's happening in those areas, that they've got big iron ore mining entities that are driving their numbers to look quite out of kilter with the rest of the other provinces. Okay. Again, there's a lot of unpacking that can be done here. I'm sure those that are interested in the geographical data sets can mine this even better than we can. And whenever that you do get to mine this data and you're able to pick up insights that you'd like to share with us, that would be appreciated. The next few slides I'm going to skip through, but just give you a sense of how much income we've received from remuneration, pensions, and annuities. That you see that the most part of most individuals receive their income from mostly remuneration, followed by pensions, followed by annuities. Other revenue sources of income categories are also highlighted there, so for people to be able to look at the different sources. The next slide sort of talks about what are the big sectors. Again, maybe also indicating to us what are the areas that were vulnerable: financial sector for individual taxpayers, followed by the manufacturing, retail, trade, and mining sectors as the big contributors to our pay-as-you-earn as a big source, pay-as-you-earn as a big source of our revenue. Then we go on to chapter 3. I think the slides are now going to be probably 2, 3 for the remaining chapters. Again, starting with the big, what are the big moving parts here? We've already spoken about the provisional periods. That for us is a big thing, because if corporate taxpayers don't follow the first, second provisional cycles, that puts our estimates out of kilter. And then at the bottom there, just how many corporates in the 2018 tax year were assessed and how many were assessed as small business corporations. Again, very important for policymakers that may want to see what this number, this 117,000, what has happened to it over time and what kind of interventions can be put in place to make sure that this grows or at least becomes a big contributing part of our economy. Okay, this is again from our highlights pages. They're just sector contributions with companies with assessed losses. Where do we see most of the assessed losses? The finance, followed by construction and agency. We wouldn't necessarily be surprised by construction sector because we see it in terms of the GDP numbers that they are under strain. Okay, I think it's a similar kind of graph to the previous one that we had with regards to individuals. That you see that the companies that are assessed that you see that a big part of our base it's a number of companies that are assessed that have got nil, but when it comes to the taxable income and the tax assessed, they're quite an insignificant player, whereas companies with 100 million above, that's in orange, you see that in terms of the number, it's quite a small number, but their contribution in terms of taxable income, as well as their contribution in terms of tax assessed, over 60%, they become a very significant contributor. Again, sort of doing a exploding pie chart to just show you again how sensitive we are to certain sectors, particularly when you look in the financial sector. I think I'm going to skip through this. Maybe just also giving a sense of what's happened with the cohorts of the corporate taxpayers that have been paying. Similar story that we've indicated previously, and maybe just what's important to note is the effective tax rates that we're seeing for these cohorts. So these are all the taxpayers that have been every year submitting a return active, that their effective tax rates moving to from 28% to roughly around 27%, but it's remaining within the 28% range, indicating that overall that's doing relatively well, and in terms of the number of them, quite a significant number of them that are in a positive taxable income situation. We had wanted to go into details about what we're picking up in terms of the assessed as a percentage of taxable income. The highest one being for long-term insurance, for SBCs, these are small business corporations, and the next big one with the medical sector. Again, when we go into the details of it, you can ask around unpacking that. Okay, the VAT chapter. Again, we're sort of unpacking that to understand what are the big who are the big players in the VAT. In terms of number, you'll see that it's mostly companies and close corporations. And in terms of our bi-monthly category, accounting for 85% of payments. Our monthly category accounting for 85% of payments and 90% of our refunds. In this instance, we're not doing an explosive pie chart, but we're sort of doing this kind of a chart. Again, are these useful? Does it sort of help build a picture, immediate picture? In terms of payments, where do our payments mostly come from? Finance sector, but in terms of refunds, that's a different picture altogether. Most of our refunds going into the mining sector, followed by the wholesale sector. Okay, one of the things that we do try and put together is to link up our import VAT data, our VAT payment data, import data, VAT payment data, as well as our refund data across the various sectors, so that somebody can then form a complete picture of where our net VAT payments are, where we sort of most impacted. You see there mostly in the tertiary sector and mostly in the finance sector. In the 2018-19, that picture remaining as such. Okay. Then I think I'm going to skip this one. Pretty much giving a similar picture. Here it's just to talk about the cohort, the 10-year cohort. Again, just giving you a sense of the ones that are above 100 million in terms of their turnover, growing quite significantly in relation to those below. So a big portion coming through from our vendors that are above 100 million turnover. Just here in terms of quickly with the reading of the eye, you can see when the tertiary sector is a big driver, particularly coming through from the finance sector. In the import space, what are the biggest contributors in terms of import VAT? We sort of highlighted to you the big drivers there, machinery, the big drivers there, and sort of compared it to last year, the previous year, 26% versus 25.7%. The next one being chemical products, followed by vehicles. In terms of duties, the big ones would be the vehicles, followed by textile and clothing. Okay, big areas where we're receiving most of our total import taxes from. You'd see that in terms of the size of the bubble there, Asia followed by Europe being the biggest contributor. Then in terms of the ports of entry, where do we see most of our revenue coming through? The Durban Harbour being the big one, followed by our internal one, OR Tambo International Airport. Again, this is just different way of indicating and showing in terms of import VAT payments, what are big collection ports, and custom duty payments, what are big collection ports. Also a very different mix of things. One of the things that we also obviously encourage people to look at the effective tax rates for these kinds of commodities and the countries that we bring the commodities through, just to get a sense of if we know our effective tax rate, our statutory tax rate for VAT is 15%, what is our effective tax rates for imported goods? Similarly, if we know what our various tax rates are for various commodities, what are the effective tax rates that we see when we compare the collections that we make versus the value of the imports that we bring in? Okay, then the last few slides that we just want to highlight. The last chapter, chapter 6, sort of it's an amalgamation of many other areas that have become points of interest over time. One is understanding the CGT. So CGT, although it is accounted for as part of individual PAT and companies' overall assessments, we highlighted here just to give you a sense of what the numbers have looked like over time. As you are aware, when the CGT was introduced, it was introduced at a particular time when we were reviewing our taxes as South Africa. We're entering the new democracy. And therefore, it's always useful to see that the intention of the tax itself and the actual outcome of the tax itself, what has happened over time and why. Similarly, with this particular slide, we sort of give an indication of what the SACU payment, the mineral petroleum resources royalty payments are, and what are the big drivers there. We'll just go to that quickly. Indicating SACU payments over time, both what we receive collectively as the customs union and what we disperse to each of the member state countries. What has come through as a point of interest is the diesel refunds that we pay out, also understanding what are the drivers of those diesel refunds. And lastly, the transfer duties with regards to properties that the transfer duties that are paid with regards to transfer of properties. Okay. I think important to note here would be that with regards to diesel refunds, we sort of measure both the megaliters and the amounts that we've paid out in terms of refunds and what has been the big trends for on-land, rail versus offshore. And you see that where the big growth points that we've seen over time, as well as where the big actual refunds that are being made for the various sectors, the big sectors coming through agriculture, mining. And like we're saying, when it comes to certain sectors that have come in and out as points of prominence, particularly electricity and peak power, have come through over the past few years. With regards to MPRR, important to note, who are the big contributors to MPRR. You see there the platinum sector, the iron ore sector, and the coal sector being the big contributors. There are some sectors where there's one or two major players where we know that we need to protect the taxpayers' information. Therefore, we have not included those data points in just to make sure that we don't expose the taxpayers' financial affairs unfairly and unduly. Of course, this would be interesting to see what the picture looks like for the 2020-21, given what we've just gone through, the COVID and the post-COVID recovery in terms of the commodity prices. Okay, I think this one is probably my last one, last of the chapters, just to look at, this just goes to show the contributions to the SACU pool. This is what our member states have contributed on average, moving from around 2 billion to about 3 billion. South Africa's contribution from 82 billion to about 102 billion, therefore total contribution of about 106. Then the table at the bottom there, you'd see then what was shared with the member states, the various member states. Overall, around 51 billion to around 50 billion. And then South Africa's share around 33 billion, increasing to around 45 billion. Sorry. Okay. And then overall, the contributions there are around 96 billion. Just also acknowledging our participation in other publications, that it gives us a good sense of comparison of where we look like with regards to fiscal measures such as the tax to GDP. We comparing ourselves to the continent, Africa, we're comparing ourselves to the OECD, and also comparing ourselves to the Latin America average, just to get a sense of whether we are within acceptable ranges or we still have quite a way to go with regards to efforts towards domestic resource mobilization. Okay, the next slide just talks about, just in terms of the process of engagement, there are various ways that we are constantly getting feedback from our users, this being one of them, but also getting questions and inputs from our tax statistics box. We also conduct tax statistics surveys from our users. So those of you who are logged in today, if you don't mind, at some stage we will be sending you a questionnaire just to ask, what else would you like to see at a workshop like such as this? What else would you like to see in our publications? And maybe just to highlight some of the questions that have come through in previous times, that perhaps just to stop there as a pause point, and maybe if there's a need for us to give feedback, we can give feedback, but some of the points that have come through in the past with regards to the various chapters, and we can sort of give you a status quo on where we are. Chair, I'm not sure if maybe I should stop there and get questions and then maybe deal with some of the areas as we're concluding.
Okay. Thanks, Mamiki. Thank you very much for that insightful presentation on the trends and highlights of the text stats publication. I think the best now is to have a body break. Then when we come back, we'll then go through the new ideas that we've received and welcome questions also from the people in the room as well as those that are online. So at this point, then I would say we take a 10-minute body break and we'll start again in 10 minutes' time. So my watch says 10:44, so at 5 to 11, we'll then resume. Thank you. Please take note of that email address if you want to post your questions in the meantime. Taxstatistics@sars.gov. Tax statistics, the full name, @sars.gov.za. If you can post your questions in the meantime on that email address so that we can then attend to them afterwards. Thank you.
She's not picking me up. There you go. Hello.
Good morning, ladies and gentlemen, once more. For those that are here in the room, as well as those that are joining us via Zoom or YouTube, welcome once more, and thank you very much. We're going to continue with our proceedings. And at this point, just before the break, SARS executive Mami Kiliolo presented to us the highlights and the key trends from the 2020 tax statistics publication or bulletin. And since this is a workshop, would like to engage on this publication, take your feedback, your comments, and questions that you might have, and then we know how to improve and what particular points that would want us to raise. Perhaps what I'll do, I will start with some of the requests that we've had before today's session, just to share that with you. There's one person that have said, I've already had a look at the 2020 tax stats and have used that data, but I now also need new data. I realize that the information will be published in the last quarter of this year, and meaning January, February, March. But do you have the information that would be used or will be used in the publication already, would have been used? And if so, would you be able to share it with me now? I especially need updated information for the stats table A1.72.7.2 for the fuel levy. So those are just indicating that where the kind of people that are asking, as well as the type of information that people are requesting. And the other request we have, the percentage of disabled people separated by gender that pays personal income tax, as well as the percentage of additional medical credits claimed by disabled citizens and by gender also. Another request is, I'm an analyst at Investec and was hoping that you could share the monthly data on tax receipts as far back as you have it on hand. Any help would be highly appreciated. So those are some of the requests, and as we go on, I'll get onto those. So we've had questions also from our guests that have joined us online. I'll take one of those questions now. Did industry lobby National Treasury for gap cover premiums to be allowed as a deduction? Don't know if Johnston or Mamiki, you'd like to take that first, and then we'll also hand over to National Treasury to provide us with a response.
Amiki, maybe you can give a view.
Okay, so the request that has come through regarding understanding, and maybe just in terms of some of the questions that we've summarized in our slide pack. This request sort of speaks to broadly the qualifying medical expenditure on the tax returns that are not reduced by the gap cover claim per payouts as required by the Income Tax Act. And what we have done is we have spoken to our National Treasury colleagues because obviously they're responsible for managing and giving direction on fiscal policy and more particularly tax policy matters. I think I would want to invite Chris Exelson from National Treasury if he is able to give a response online. He is online to be able to give a response on this this particular inquiry that has come through around understanding of the qualifying medical expenditure on the tax returns. I think we just want to check with the team if Chris Exelson from National Treasury will be able to.
All right. Whilst we're waiting for Chris to answer, I'd just go through one or two of some of the requests that we've had or feedback that we've received regarding the publication that is already available on our SARS website, www.sars.gov.za, as well as the National Treasury website. The 2020 publication is available there. I believe Chris from National Treasury is now ready to respond. Thank you. Some of the comments we've had, members of the public congratulating us. It's on the excellent publication. It's really an honor for us to produce, and it's really proud for SARS to be able to contribute in this meaningful manner and to be able to add value to the various industries, the academia and institutions that are using these statistics. And it also empowers us to be able to further our Vision 2024 and use the data and the science that we need to improve how we administer the tax and customs legislation. All right. If Chris from National Treasury, can you please then respond? You can unmute yourself, and we are listening. If you are muted, please check your mic, Chris, and then unmute yourself, and then we can talk to that. The question was, did industry lobby National Treasury for gap cover premiums to be allowed as a deduction? That is the question that is on the floor currently.
So yes, we have got quite a few submissions on that. People are asking for that. We made changes to how deductions are made for example, income protection plans. Quite a few years ago, I think it was in 2014 or 15 or so, when we changed how we tax this type of insurance. So previously, income protection plans were tax deductible, but then when you got the payout, you had to pay tax on it. So we moved it to the other way around. We said, okay, well, you can't get a deduction up front because it's a type of insurance, but then you can get the whole amount tax-free.
Very much, Chris. There was a follow-up. If so, what was National Treasury policy reasoning for not allowing? So then that's not relevant in this instance. All right. Don't know if Johnston, you wanted to comment?
Now, look, to the point about the frequent sharing of the information, I think it's important to just state that, as I alluded in my opening remarks, that going forward, we'll be looking to work towards how do we make the information more frequently available instead of making it available once a month. But having said that, it's quite a lot of data to mine through to be able to make it available quite readily on an ongoing basis. But our desire going into the future is to make sure that, like the Investec requester asked, that we are able to provide in the intermediary periods of releasing one edition to the other, we should be able to find ways of providing some supplementary in the period type of data. So we continue to strive towards that. And as our data gets richer, we should be able to do that. And we are working towards accomplishing that. Perhaps not in the next round, perhaps in the medium term period. Thank you.
Thank you, Johnston, about that. Some of the requests come from students who are doing research at universities. And just as an example, one asked, I'm currently busy doing market research, and I'm looking to understand the volumes over the past 3 years for the following HS code 8456.11. So this is not a student, but yes, this is one of the person doing market research. So it indicates that people are finding these stats relevant and are making use of it, and they're asking for more. We'll welcome really more ideas or new ideas of how the publication can be put together, or what are new things that we need to include into the publication. And some of the requests also is, could you please send me the latest 2019-2020 statistics on tax collection per SIC/HS code? This is required for analysis in an assignment. As I said earlier, some of the students are using this information for their study purposes. So we're glad to be contributing to the progress of citizens, or yes, other people living outside of the country. Any other questions? Okay. Some of the other comments that we've had.
May I assist?
All right. Mamiki, I'll give you an opportunity.
Thank you. Thank you, Program Director. I think some of the questions that do come through, as you are aware, we are publishing our tax statistics in supplement to other publications that officially are part of the let's call it the ecosystem. And therefore, in our space as SARS, one of the things that makes us slightly unique to many other countries that our tax statistics are published, our trade statistics are published by SARS as part of the Customs and Excise Act. And therefore, we do have a dedicated team that deals with requests for detailed information pertaining to trade statistics. If you go onto our website as well, there is a platform that enables somebody to extract the data at a much granular level, at tariff level, at HS code levels, the different HS code levels, to be able to pull out the data for both export and import-related trade data. So we always try and complement each other's efforts, because in our tax statistics publication, we provide almost a summarized version of what is available from our trade statistics colleagues. Thank you.
Thank you, Mamiki. Just to give that website address for National Treasury, it is www.treasury.gov.za. So you can also find the latest test statistics publication there, as well as on the SARS website, sars.gov.za. Thanks. We also have a question here. Okay, this is, it's rather lengthy, but it's a question, so I'll take you through it. I have, with great interest, read your tax statistics. I'm a tourist researcher and strategist, and have a few questions regarding the accommodation and catering statistics. I see that there is a figure of 7,029 small business corporations in these industries in 2018. I also see that company tax stats on a number of enterprises, there are some 17,129 tax-paying accommodation and catering businesses in South Africa, the year 2018. Now, with the difference between the two, that is 17,129 less the 7,000, which is approximately 10,100 enterprises, be the large enterprises, and perhaps noting that it might also include some smaller ones that have not self-selected to be treated as small business corporations. I don't know if we have an answer. So is it, so the summary there is that, is it possible that some of the 10,000 or so plus corporations that are dealing in accommodation and catering, large enterprises for the year 2018?
Maybe let's pass that. We'll just gather our thoughts around it and then pick another one.
Okay, there's one, this is a request where the person says, I'm looking for revenue collected on beer, sorghum beer, wine, and spirits. So this goes to show that there is more and more requests that we get. And yeah, so what Mamiki was saying earlier, that we've got someone that then takes this request and goes into the detail and provides that detail. So this kind of a request will then go through that, and then we ask further questions, especially that this individual is not indicating the year and being very specific. So we will then get back to them to all the questions. If there are any questions from our colleagues online and any comments they would like to make.
Whilst we wait, suffice to say that that last question, that information under specific excise domestic is readily available, and we should be able, through the minders of the box, to be able to provide that information. So it's as you say, Smangele, program director, that some of these we act on an individual basis, but we do aggregate when we see that there's now a common theme that is coming through. But those that are coming in, call it piecemeal and drips and traps, we respond directly to the inquirer. Yes. Certainly that information is available. Thank you.
Okay. Perhaps also maybe to add to Johnston, that what you would find in our tax statistics publication is that we give a bit more detailed data for each one of the subcomponents of the taxes that we administer. Yeah. So it gives the reader a view not only of the next level of detail, but it also gives the reader the view of this data set across multiple time spans. So there is a bit of time series that they can work with, but then there's a bit of longitudinal data that they can sort of put together. What would be useful is also then to complement and supplement this, if they're looking for a much more regular update, with the Section 32 report that Treasury publishes as per the PFMA at the end of each month with regards to the collections by SARS on these tax products. So we are able to share with Treasury, who then publishes officially what the picture of the fiscal picture of the nation looks like. And in part of that detail, you'll find updated numbers from Treasury as provided by SARS on each month, as each month progresses, what the collections have been, particularly for those who may want to see what the impact of COVID has been for those particular subsectors in tax administration.
Thank you. Thank you for that. There's another question here. For income codes 3606, commission, and 3616, independent contractors, do they both claim business travel expenses under 4015, travel expenses, actual business cost? So that's the question. Do they commission as well as independent contractors? Do they both claim business travel expenses under that 4015 travel expenses code, and is, as an actual business cost? So that's that question. Or does 3616 claim under different deduction codes? So 3616 being the independent contractors.
We'll respond.
We'll respond to that later. Thank you.
Yeah, there's some specifics. There's some specifics, so we'll respond.
Thank you. So we'll welcome people to send more on our direct email for the tax statistics document. So it's tax statistics at sars.gov.za. If you send us your feedback there on the publication itself, and any feedback or any new ideas that you'd want, or any questions, if you send it even during this session, the questions, we would welcome them and then we engage on them. Thank you. Right. Let's see what other questions are there. I'm inquiring about data availability related to a number and name of existing firms in the clothing, textiles, footwear, leather and leather goods industry as at the end of 2019. If you do have it, how do I go on to obtain access? So that you can go to our SARS website to get the publication, and or send us that email directly, and then we will respond to you. See, Johnston, you ready to respond on something or comment?
Yeah, I think particularly that sector is a sector that we've been working with the DTIC on to try, at least in the current period. So we would readily be able to give that information as it is being focused on currently through the interagency working group. So we comfortable that that information is available, and we should be able to respond to this particular individual query.
Okay. No, thank you so much for that response. If I were to just check with you that this publication, when it's published, it seems like, there's a lot of data that's put out there, there's analysis. How much effort is put into putting this publication itself together, from the background team, really, just maybe that we get that understanding, yeah.
Mamiki will respond to that as she runs the project.
Yes, yeah, thanks.
Okay. So some of the slides that I could not go into in detail, but maybe let me just take you through the value chain of what's involved in the publication such as
That
this.
would be great, yeah.
So obviously there's the logistics and project management team that makes sure that all the things that need to be in place are in place, and we adhere to timelines so that we're able to publish at a particular point in time. There is a team that reviews all the content and related data requests from workshops such as this, and from our inbox, and from our interactions with our users and readers. And then there's a team that then reviews all of the data requests. They provide an update, and they process the data extracts scripts, or the data extract files. And that includes obviously testing and quality assurance. There's the data staging team that makes sure that all the data sets are put together so that the analysts can start then giving an interpretation, a review, an interpretation, descriptive statistics, trends, critical analysis, and obviously starting with the visual graphics and the storyline. Again, there's testing and quality assurance process that we go through. And then we start then with the publication, with us drafting of each of the chapters. And there's a lot of editing and, again, testing and quality assurance work. And then we do the final layout of the versions of the publication. And then there's obviously then the final stages of the publication launch. Now, if you just look at who are the key stakeholders that are involved in this kind of a publication, the Ministry of Finance, because they have to give us the go-ahead to publish this publication. There are also, Treasury and the Ministry of Finance is also a joint publication partner. The Office of the Commissioner, because they also have to give us guidance on the kind of data sets that we can put across in our publication. National Treasury, we do have inputs from them in terms of the content. They give us, they have the subject matter experts who also review and give us perspective on some of the content that is in the publication. And obviously they are co-launch partners. Within the area that Johnston is in charge of, the National Revenue Management Division, we would have our analysts and the data team that pulls the information together, and then we have the editors that obviously assist with the review. Critical as well is within SARS, we've got an enterprise data management team that helps us with data sets that are sitting in their space that they're able to extract for us. So as an example, some of the municipality information that you've got specifically comes from the enterprise data management team because they sit with the big data, with the big data sets of the municipality-related information. We also have our knowledge management unit that also does a lot of work with regards to graphics. So as we're experimenting with different ways of expressing data, tables, which may be cumbersome for some people to read, and therefore if we sort of start telling the story of taxes using graphs and visuals, that also helps with people engaging with the work that we do. In terms of the content, we also have our legislative policy, product, process owners, centralized operations, that also give us technical evaluation of the analysis that we provide. So if we then say there is some change that we're seeing around, let's say, pension reforms that's affecting our revenue outcomes, they give us the necessary technical interpretation of what we're seeing to make sure that we do give as accurate and as close to reality the analysis of what we're picking up. Of course, these events would not happen without the assistance of our communications and media division, as well as our digital channels teams, not only helping us with the layouts and making sure that all the necessary documents look the way they should be, professionally in line with SARS standards. They help us liaise with the printers. In the past, when we used to publish and print, so we've got a print copy here with us. And then obviously dealing with the launch of the publication. So, and for days such as this, they are a very critical partner to make sure that we do continue to do our work in terms of the objective number one, clarifying the work that we do for our taxpayers and making sure that they can consume the work that we do and make sense of it as fiscal citizens.
Yes.
And of course, a lot of the things that you see here would not happen without the support of our procurement and finance team. So truly, it's a collaborative effort, not only within SARS, but also within the Ministry of Finance.
Thank you very much for that insight. And it does show that it's months and months of work to get to this point where you then publish this bulletin on an annual basis. Okay, I can just look at some of the information that's been asked. Someone asked for statistics about the VAT gap from 2010 to 2020, VAT fraud cases, those that were reported and unreported, and the respective amounts of VAT fraud between 2010 and until 2020. You'd see that from this kind of a request that someone is putting together, doing research, or they are preparing for something. So really, we are grateful that we are able to be of assistance even to other institutions outside of the South African Revenue Service.
Yes, certainly. I think some of this information we do provide at a very high level in our annual report in terms of syndicated fraud. I think in the last report we did talk about what we picked up in the second-hand gold environment around VAT refunds and the fraud therein. So I think, again, to Mamiki's earlier point, we should be able to triangulate if we are doing the research between the different documents, whether it's the trade statistics, the tax statistics, the annual report, as well as the Section 32 reports that we provide on a monthly basis. But certainly, we're closely looking into fraudulent refunds and syndicated fraud, so to speak. Thank you.
Thank you. Any comments from our guests that are online? Okay. Right. Okay, so what we're going to do now, we come to the end if there aren't any more comments or feedback that we're going to get. So we will wrap up today's session. And really, it's been great that you are able to attend, as well as those that are joining us online. Thank you very much. And thank you very much to our colleagues from National Treasury for joining us and interacting and providing the support and contributions that they've made, both on the publication as well as in today's session. And we welcome further input and on the email address that we've given you, taxstatistics@sars.gov.za. Please email us there. And on the website, you'll be able to download. So far to date, we've had over 600 downloads of the document, as well as the different presentations. And you are welcome to go there and look at what you are, specific information that you are looking for. Now, we have this kind of an event or interaction with the different user groups from different particular industries, and we strive to have it on an annual basis. And last year we did not have the event as a result of very strict measures around the COVID pandemic. So I'd like to really reiterate that going forward, SARS will deploy the latest time series orientated database systems, which include software that provides fast, direct access to data in tables, charts, and spreadsheets. It has become apparent, really, that there is still a lot that SARS needs to do from an administration of the data, and more particularly on the tax statistics publication in itself, in order to enhance our understanding of taxpayers and trader trends that are emerging, especially because we also need to get onto those taxpayers that are outside of our register books, as well as look at risks, the economy, vertical and horizontal linkages, the role of taxation in growth and development, and even more. So this is just examples of what we have received from yourselves, as well as we are working with all this information, as Mamiki has indicated to us what is involved in the interpretation and the process. We want to see more improvement into it. So as a summary and wrap up, I would say the key issues that we articulated in this workshop are the income protection plans for companies, which is tax-free. However, as it is an insurance, it becomes more realizable on payout. So you'd see the results of it at payout. When you have saved, you only see that at payout. You will not see it whilst the saving is in place. And with regards to company income tax statistics on accommodation and catering, the question that I had indicated that was asked earlier, that sector taking into account the variance from large companies and small businesses, which is high, significantly. So it is a mixture of small businesses and large companies that are involved in the catering as well as accommodation sector. And with regards to VAT gap data, that is VAT refunds fraud, SARS is monitoring that very closely. Thank you very much. So those are some of the things that came out. Thank you very much for taking your time, being with us on this rainy day. And we haven't had rain in Johannesburg for quite some time. And today was one of those days. And I suppose it is a blessing. Thank you very much for the time and for being with us, and those that have also joined us online. Thank you very much. And thank you, Johnston and Mamiki, and all the teams that have worked behind in the preparation of this workshop. Thank you. That's it.
Thank you.
Thank you. To submit the questions, follow up. Text us inbox.
Are we still?
You can go back.
All right. The email.
Yeah, just reminding. Yeah.
All right. As a last reminder, the email address that you can use to interact with us on an ongoing basis, you don't have to wait for the publication to come out. It is taxstatistics@sars.gov.za. And you can also find the current publication, which is the 2020 document that was published in December on the SARS website as well as the National Treasury website. And thank you very much for being such, I would say, guests and giving me the opportunity to be a host to you today. Thank you. Goodbye.